Darshan is here to tell us what's the story behind Rain Industries. Darshan.
See, it's a counter that has been buzzing, and we'll talk about Rain Industries, but it's mainly the balance sheet repair that is. First of all, it makes calcined petroleum coke and coal tar pitch. We'll tell you what that it is. And less than 10% of its revenues comes in as far as cement plant is concerned. It has 2 cement plants with 3.5 million and ton per capacity that is there in India. Now, if you take a look at this chart that is coming out, you will come to know what exactly it is there. So, basically, this is the calcined petroleum coke. This is the coal tar that is used to make anodes, which are used in the aluminium industry. So, that goes into aluminium smelting, and then you have aluminium. So, there is a big relation as far as aluminium pricing is concerned and aluminium production is concerned with Rain Industry products that it makes. Mainly, it has been focusing as far as cleaning up its balance sheet is concerned, and that's been the big trigger. The recast is over. The focus is clearly on deleveraging the balance sheet. What are the debt reduction strategies that they have adopted? First of all, they have repurchased bonds worth $136 million in the last 2 years itself. So, they have been buying back their bonds. So, debt has been a big issue, and they are saying that they will repay more in the next 2 years. In fact, as early as the past few days, they actually said that they will repurchase the 2018 bonds. Currently, they are renegotiating rates with lenders to actually lower the interest costs. Now, how are they creating shareholder value? As far as the Indian business is concerned, whatever cash they get, they give out dividends, and from the global operations, whatever cash flow comes out, they pay the debt of the company. Now, take a look at the Dow Jones Industrial Aluminium Index, and that will give an indication of why Rain Industry was also moving. Look at how aluminium has moved from $79, it's moved up to all the way to $118 million, and that has actually triggered significantly. Not even it, KOPPERS, which is one of the competitors that Rain Industry has, that also the share price of that, look at the nearest competitors, look at the pricing, how that has happened. So, clearly the sector is in an up move that is there. Now, as far as the bond pricing is concerned, the 2018 bond and the 2021 bonds, just look at the strength of the bond that has happened in the past few months. So, there is enough amount of evidence to suggest that there is the credit rating is going up, and that is why the bond prices also of the 2021 has gone up significantly, and that is reflecting on the stock price. What are the triggers? No capex in the near term, which means that all the focus will be there as far as debt reduction is concerned. Strength in metals will aid to the volumes and margins of the company. And finally, valuations not at all expensive. Valuation cheaps at 8 times. It's much lower than its peers currently. What are the concerns? First of all, high debt on the company. That is a big trigger. Almost 5,000 crores of debt that is there. Turnaround in business cycle has happened, but if that goes awry, this will impact Rain Industries negatively. And finally, if they do any more kind of leverage acquisition that they did with Rutgers, that can actually work against the company. But overall, it's a company, and the management commentary has been that they are looking to reduce the debt on the company and focus more on the operations.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.